Guys, welcome back. Episode 7, Invest with Instinct. And I have a repeat guest for myself. I've done a podcast way back in the day with our guest here for just other purposes, I suppose. But he was generous enough to come back on and to talk more a little bit about kind of what we've been riffing on for the past few episodes, more of the psychology, the theory, finding out who you are as a trader, how to best invest your time and money and to be a better version of yourself when it comes to the markets. So Tony Greer, you guys have probably seen him around. He puts himself out there. I see him on Real Vision all the time. He's got the Morning Navigator, which I actually just read his note this morning. So seems like some of the things are going pretty well. He's maybe reading some things correctly out there in this interesting regime, we'll call it. So Tony, welcome. How are you? How are you feeling about everything going on out there, outside of the shit show that is also going on out there?
Yes, James, I'm great. Thanks for having me on again. I'm always excited to talk about any aspect of trading, especially with studious people like you. So we can dig into it. I feel good about the trading markets. In fact, I think they're rather spectacular. And spectacular in a sense that I can get a beat on what's driving them and perhaps get an idea on how to anticipate what's going to happen by knowing what's driving them. That's a good market for me to be able to tactically trade in and out of different sectors, for different reasons. And so far so good. So I'm excited about markets and thrilled to talk about anything you like today.
Yeah, we'll come actually back to that in the kind of tactical regime that seems like we're seeing. But if you had to elevator pitch yourself on, like, if somebody said, "Hey, what type of trader are you, Tony?" Right? An elevator pitch to all of us as to like how you approach markets, how you've developed Tony Greer as a trader over your career. What would you say for that?
I'd say I am a long time surviving accountable risk manager. James, that's kind of what I learned early on, is that the objective is to stay alive to trade another day. That's the starting point. That's the wake up when you say good morning to yourself and brush your teeth in the morning. It's like, okay, let's put some risk out there today, but let's live through it. So that's one of the first things I've learned early on. I learned everything that I know about the serious rigors of trading from Goldman Sachs when I worked there for 6 years and traded commodities. And that was sort of, joining the Marines in terms of understanding what managing risk really is, right? And managing risk really is understanding the things that affect the positions on your pad, what could go wrong. Scenario is always in your head, and having a plan within that scenario. So when something does go wrong and the shit does hit the fan, you act out the plan that you knew that was coming in case things went wrong. So, I try to always, everything about my trading strategy is, we're not betting the house on this. We're chipping away and we're trying to generate solid returns and be in the right sectors for the right periods of time and the right runs. And I would say that that's how I sort of posture myself to my readers, to the subscribers of the Navigator. I try to identify myself as someone who's always like kind of sitting at the table. And James and I were just talking about Las Vegas before we started the conversation, because I was just recently there. But, it's the same idea of being at the table, playing the game. And, there are times when you're flat and there are times that you get to split aces and bet big, all within the context of surviving and staying alive for the next hand. Right. So that's kind of the way I'm looking at the world and approaching trading and investing, obviously just for different time frames for me. But everything is about being patient, having dry powder for when something good happens, and being able to put, capital to work when there's panic in the streets on both extremes, and sort of, meaning with taking it on and taking it off. So you're always kind of trying to look to you're always trying to look to buy into those trades where there's panic exit going on, and then let the buyers have it when, there's hysterical exuberance going on in the same story, and it's always kind of the thing that you hunt. But I would say, just to kind of encapsulate it, yeah, it all comes down to waiting for the right opportunity, managing the risk that you're able to put on, and then, sort of allowing yourself to adapt to the environment, to trade out of it in whatever kind of stage is necessary, if that's a fair answer to your question.
Yeah, it's very fair. And like, there's this theme of survivorship has just consistently come up with everybody. And um, like I always like to say, keep your seat at the table is like the most important thing, right? In a poker game, uh, just being able to have your seat not be taken, because if the game gets good and you're not in the game, you're not getting in. You know what I mean? And if you've given up those last few chips and you're out of the game now and you've missed that opportunity, I feel like it's easy to say, but like until there's all these new people that have come in 1, 2, 3 years now, and I don't know. Well, they're probably in the midst of it right now, but I don't know that they've been in the situation to have to survive yet, right? Because when things are going good, you're not needing to ask those tough questions and make those tough plays and hold on to those last dollars, right? It's all abundant. But in the last few years or year maybe, they're probably experiencing that.
Can we talk about this as it relates to me, to the game of blackjack for a minute? Does that fit with the mantra of what we're talking about here?
Who doesn't like blackjack? Yeah, go for
Yeah.
it.
So like, James, when I and my wife knows this, unfortunately, for knowing me my whole life, it's like when I am going to play blackjack, it's not like I'm not going to sit at the table for 45 minutes before dinner and play blackjack. Right. The way I play blackjack is sort of, I need a 4-hour runway.
Yeah.
No, it's because, right, the
Yep.
only times I've ever made money are sitting at the table for that 4-hour runway and knowing that at some point during that runway, to touch on what you just said, the game gets really good,
Mhm.
right? And all of a sudden, something will happen, and you'll just notice from the flow of everything where you're like, wow, it could go really bad this could be one of those times when it gets really bad for the dealer, right? She may bust 4 hands in a row right now, and that's when you start betting big. And all of a sudden, the table starts making money hand over fist. It's literally the same thing in trading, where I spend a lot of time shuffling my chips, and playing table minimums, or, kind of, which is
I
almost
got them
not
right
playing
here.
it,
Good chips.
you
Yeah.
know, yeah, which is almost not playing at all. But then, you seize opportunity, like we just had with this recent sell-off right to the 200-day moving average in the S&P. And the people that were following along, I think I used the blackjack scenario when I told, when we were pounding the lows and we had that right set up to be able to buy into a tradable bottom. I was like, here we go, guys. It's time to split aces, right?
Yeah.
This is like, no matter what kind of bet you had, and whether you had a table max bet in the circle, you get the 2 aces against whatever it is, really. But God forbid a 4, 5, or 6. And it's like, okay, your bet is now doubled. And God forbid you have to double down on one of those, but
That's
that's
what
the
you
time.
pocket cash it a little bit more.
Yeah, exactly. And I hate that. I always like to have all the
Yeah.
chips that I'm
Yeah.
using in front of me. I'm so superstitious, but that I just wanted to kind of share that, because I feel like, you can tell when it's the same thing in the market. That read through is exactly the same at the
Yep.
blackjack table if you're there for that long run.
Yeah, you're feeling like the ebbs and the flows. And one thing I personally think, because I love this side of things, I love like objectively looking at myself during a trading session. Like even today, we saw oil reject a little bit off that Middle Eastern news, and then we started filling that gap from Sunday night just this morning. And like I'm like getting excited. I'm like, what am I gonna do? Like I like feeling all that. And then like for instance, I took a short when the gap like we work back into the gap, and then it goes against you for a little bit, but like before it confirms going through that gap, and you're like, wait, is this just a false? I like feeling all that, but the only way you're going to be able to really like consistently make good choices in that environment is like, first of all, the wisdom of all of the years of it, but the patience, the right money, the risk, like everything has to be done well in order for you to like consistently make those good decisions when the game gets hot or when the opportunity comes, right?
Yeah, and the same way, James, the same way is sort of, playing defense for a while, like I said, and betting small when you don't have the same edges. It's the same way as just throwing the $25 minimum up there when the dealer is beating everybody on the table with 4 and 5 card 21s. Like I'm really good at playing super defense until, that storm blows over and you sit and watch people around you and say, okay, you just beat me with 2 5 card 21s. I'm going to bet big now. And you go, oh boy, this guy's about to get, a terrible lesson. And then the dealer, or he'll just do it again, and it's kind of similar thing in the market where, when your money's being treated best. You definitely get visceral feelings when you're looking at the market and you've got a position on, you're like, wow, these are good sales, but I think it's going higher. And then the market falls away and you're like, why didn't I make a sale? I said to myself, that was a good sale. And you're like, because you have that bias that the market is going higher, right? It's not reached your objective yet, but given everything else on the screens, you could have just made a good sale.
Yeah.
And then so that's
it was like it was whispering at you, like your gut's right.
The numbers. Yeah, the numbers. The
Yeah.
numbers. You know what your P&L looks like. You're like, boy, that's frothy, and things like that. And you're like, yeah, this is when you should be taking profit rather than saying, no, I want another, and it's kind of a case of what I always one of my big traps is sort of, are you trading what the market's giving you, or are you trading on your hopes and expectations of what will happen? And the more I can just be objective and go from just reacting to what I see happening, I do much better, when I have the freedom to do that. Excuse me.
Yeah, because you have your original probably plan, right? But if your plan is too rigid and you have that greed, right? Like that's a great example. Great example. So like you have this idea, and we'll just take oil again for whatever reason. You have this target, and like, let's say your target's $95 and it's at like 94.50. And everything in that moment at 94.50 is like, this is it. That was the last push. Like you should take it. But like maybe you're down, right? Maybe you're stuck on the month and you're just like, this is my one trade that's working. Like you start talking about all those irrational thoughts that are like driven by fear and greed and things like that. Like the seasoned trader just takes it, right?
Yeah.
They know like, okay, like I might actually reach my target, but like everything right here is telling me like, no, that was the last thrust.
Yeah. That you just defined, James, sort of the ring trader mantra of what we used to say. That's what the badge is for. Right. And that's what the badge is for, is the same thing, meaning that, in the ring, what it meant, there's nothing going on and somebody comes into the ring and has to buy a small amount of contracts and runs, the security up, a couple of bid offers, and the locals are there and they're like, oh, this is what the badge for. You sell that guy, he just bought contracts out of line. The local badge says, oh, I'll sell you those. And then as soon as it comes back in line, they're right there to buy him back. Right. And that's what the badge is for. It means like when you know that these are good sales, you make the sale. Right. And you get flat and then you sit there and look around the ring and look for your next trade. Right. And stop thinking that you're Paul Tudor Jones and that this trade is going to go 30% and you're going to get rich and run away and buy an island one day. You know what I mean? Like it doesn't work like that. And that's why I've done much better. And I just try to impart this because I was once trading, my lights out left and right and getting chopped up. But I try to share that stuff because I think that you can make headway with sort of, like you said, putting those irrational thoughts out of your head. Like look at yourself and be like, what? That has nothing to do with this trade, and like focus on what this trade is doing. Right. And get in the trade. Right. And when it's a sale, sell it. And when it's a buy it, and so there's a lot to that. I think if you're going to trade like a ring trader, which I very much do, which is sort of, being in the markets, looking to trade and make money every day. And so that's kind of how I try to posture.
So let's dive into that a little bit more. Like we're traders, so we're a bit more short term, maybe swingy. Like we're not long term investors. So like, what are some of the examples of like you're in a position it's going your way? Like what are some of those signs potentially that instinctually make you feel like, oh, like that something's different here? Like when you see that tape fighting back against you, like what are some, is it internal feelings? Is it something you're seeing specifically in order books? Like, what are some of those signs that people should look out for? I know it's not easy because everybody's looking at it in a different way, but yeah.
I'm trying to think, James. Like, how do you mean? Like the things that are telling you that you're wrong in a position, or
No, but like the example we were saying, like, you know, it's working for you, but and you feel like you have this target, but the market's kind of telling you like we're not going to get there. And why is that being told to you if it's not obvious, right? Sometimes it could be obvious, like if you're an order book trader and a massive seller comes in or something, but often people are not seeing order books, right?
right. Man, it's a tough one to answer. That's
It's
a tough.
intangible, right? It's like a soft skill.
Yeah, it is. It is. It is. I'm trying. I think. I don't know. One thing I could do is share like a specific setup that just happened, right? In a scenario where I was trading refiners and Marathon Petroleum was bid lights out, like trading the highs, like a plain vanilla is inhaling it, and you see the crack spreads start to give a little bit. And I happen to have been long Marathon at the high, so I'm like tightrope walking, and I see the spreads back off a little bit, but I still see bid. Now I have a montage here in my Bloomberg, so I can see exactly who's bidding for what in the market, and so I watch when I'm in a position, and I see that there's a bid that keeps coming into the market, and I know what that looks like, having been a sales trader, et cetera, et cetera. And so I was just reluctant. I was like, this thing's just going to keep buying. You're like, it's a good sale here. The crack just backed off a little, and they're still buying. And it's like, okay, now gasoline just backed off, 10%. Interesting, but they're still buying in this thing. I should just sell this and get out and be flat. And so I sold a quarter of my position, and I'm like, man, this bid just keeps coming back and the whole energy complex is kind of fading. Then all of a sudden, obviously, what happened, right? The buyer finishes up, whoo, thing bottoms out like $4, and I'm wearing the last, I sold a quarter on when I knew that the buyer was gone, because again, I know what the montage looks like. And so again, another soft play, sold a quarter, right? Instead of being like, oh, this is an out, but it's not where I wanted to sell it. So that's not where I got out. Right. But that was that piece of information figuring in my head that it looks like the buyer at least backed off, if not just took off. And I should sell this whole thing here versus playing patty cake and selling a quarter of the position. Right. And then wearing the next half down $2, before the thing finds a vacuum bottom.
Yeah.
So,
do you feel like that's because it's like something like us traders will like kind of never, it'll always be there a little bit, but it's because like we want to be right. And it's like, it's a buyer. It's alongside your long, right? So you're kind of like, just hold, like, keep buying there. It's like,
And when you're a trader like us, you have to remember, like, ding dong, you're supposed to be short or flat at the top and, a little bit long or very long at the bottom. You know what I mean? So now you're looking at the thing at the top of the range and there's a buyer and you just won't sell yours because you can see the buyer. Meanwhile, you're like, oh, this is versus the rest of the market. This thing is teed up like a beach ball. And so that's sort of the bias that you get into, not pulling the trigger. And I think that, I don't know, I hope that kind of addresses the question that you asked at first. I don't want to get away from that.
It totally makes sense to me. And I always try to look for like the lesson in it. And that's a great example. Like I look at icebergs a lot, like when I see big orders, it kind of hidden in the markets and things like that. And there'll be times where that's a perfect example of like all the other like related markets are starting to kind of back off. And this is the only one kind of just like, holding up there, and it's because of one guy. Like you're being given the opportunity to not only get out, but like maybe you're getting a really good sell spot here, right? Like you might be able to just take all his bids if possible, as many as possible.
Totally.
Like, and you're not in the mindset of like doing that because you're so hopeful that like his buying is gonna like bring up everything, and hold it. That's not even gonna enter your brain.
Yeah, but if you would have been sitting here next to me while we were watching that scenario, I could have convinced you that Marathon was going up another $1. I could have convinced you. I swear to God. You know what I mean? Like you were like, no, this guy's got like a God knows how much stock to buy. So anyway,
Yeah,
That's
no, it's
one.
funny because you could. I always talk to people about this. Like, you could convince. I could convince you of like 15 trades right now, right? And they could all be wrong, and they'll make sense, right? They'll be like, yeah, I can see that happening, right?
That was the uranium trade for like 2 years for me. I had guys coming into my direct message telling me that I gotta be long uranium, and I'm like, "Look, I love you for sharing that thing, but I don't see this thing moving. This thing is a rock." It's 5x 5 years later.
Yeah. Oh man, that the uranium trade for me is a bit salty because I had a bunch of like long dated options on those, but 2 years early, right? So they've pretty much gone down 98% in the meantime, and only now is it's like they're just perfect, like chef's kiss of markets. They're just being like, once your position's almost dead, we'll give you a little
Yeah.
hope just to bring you back in for the next one.
Yeah.
That's funny.
Totally wild.
But yeah, I think that conversation we just had is a good example of like the value of experience, because like you just struggled to put words to it, and that's exactly like I think what experience does. Like, it's kind of hard to put words to it. Like, you're seeing patterns that might be deep in your tank that were from something you saw in real time, but like you're not necessarily remembering that exact time that you learned something, right? And you won't exactly remember the marathon thing in 8 years, I'm sure, right? But
Right.
like, but next time that happens, you'll be like, I kind of vaguely remember
Yeah, yeah,
the
yeah,
time this
yeah.
happened.
No, there will be, at the very least, like I'm still a lizard brain, but I'll sell half next time. I'll be like, yeah, you know
Right?
what, you know what I mean? I'll sell half and then I'll lose my shorts on the other half. And then the third time, believe me, I'll be out.
Yeah, that's the time it'll hold and it'll go
Yeah,
up.
yeah, no, then it'll go up $2. No, literally, that will literally happen. But you take what
Yeah.
you take what you get, though. It is what it is.
Yeah, it's sharpening the sword and plugging those leaks. And what's funny is if you sell that 50% instead of 25, like that just made you a bunch of money, but it won't be like visible on your P&L, because like you'll still
Right.
probably take a loser on the trade, but really you like that was a huge money making decision there,
Yeah, it's true.
you know.
It's true. Very
Um,
important. Very
but yeah, so
important.
how long do you think it took you? I mean, I know you've been doing this a long time. You're 85 now, I think,
Yeah.
roughly. Um,
Well, yeah,
how
yeah. I'll be 100. I'll be 100 next week.
how
No,
long do you think it took you to kind of be like, all right, this is my style. This makes sense to me. I'm gonna stick with this. How long did that take you?
I'll be honest. I put it this way: I've had some struggles, and I've blown up some trading accounts in my day. Early on, and so I had those scars just like everybody else. And fortunately, I had them while I was lucky enough to be, also making money. So I was able to replace what I lost and move on or start over again. Um, and so when you have those sort of extinction events, and those are experiences that you don't forget, and you really get your battle scars through. And sort of moving on from there, I'll say it took me the biggest swing in performance that I've had directly coincided with when I left working for Wall Street and started working for myself.
Mm,
And that was when I started writing the newsletter on election day in 2016. And that was after I had turned off any responsibility that I had to report to anybody, to sell any stock to anybody, to execute stock for anybody, and or take anybody out to dinner or do anything. And I focused all my attention on markets and writing only about markets. And I've already had 20 years of experience writing about markets, which I think is one of the most helpful things that I've ever done, because when you write, you force yourself to understand what you think, and you force yourself to be able to explain what you think and be accountable for what you think. Um, so that was a huge head start in learning to sort of navigate markets. But like, to get back to the question, once I threw out all the other responsibilities and just focused on markets, I developed a system which is really just being diligent about following closes, a system of following markets using my own spreadsheet. And the spreadsheet just helps me monitor weekly and monthly and quarterly closes and performance, like across sectors, so that I can just line it all up and look at it at once. And once I started doing that and really defining my own process, that's when my trading performance went vertical. And I'm not trying to toot my own horn. This is something that I've been studying my whole life and have been observing my whole life from the time my trading accounts were down, 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 and down, and or gone. So now, since I've been focusing on nothing but, I'm nobody's more excited on Friday's 4 o'clock close than me, especially if it's a weekly, monthly, quarterly close. Now I've got, a whole new slate of information that I can just plug in, take a photograph of, and study and go through the charts and say, okay, what did this monthly move mean? Okay, let's drill down then. What were these weekly moves all about? What did that? Wow, this thing is breaking out. I should be in this, and so that's kind of like my new market discovery tool. And that forces me to let the market show me what's going on and trade it or surf it versus me having a view on what's going on and putting a position on and waiting for the world to agree to my view, which is the way I sort of identified the way I traded when I was younger. When I was a kid, I used to read everything in the Wall Street Journal and the New York Times and everything on Reuters and everything on every screen and say, okay, the dollar should be higher here. Buy me some dollars. That's my trade. Yeah. I read everything on that's been printed about it in the last month, and I think the dollar should be higher. Buy me dollars here. Here. So eventually the world will see what I see, right? And now it's total, it's sort of trading from a position of total humility.
Yeah.
And like, I don't want to have a view. What I've integrated is not having a view and trading like I got a badge, like I'm in the ring, where I only want to profit from trades and not have a sort of leaky bucket of shit in my portfolio, and really trade to run up the score and not trade to say I had 95 positions and they all went right one day, because that doesn't happen to anybody. So hopefully that's sort of been, that describes like the defining moment of where things got, at least the market slowed down a bit for me. And so I can go ahead. Sorry, I don't want to cut you off.
No, I just want to reiterate what you're saying here so I best understand it. So I think the one thing that I've noticed with you too, from other things I watch you, and you always reiterate this point, is that you don't now approach it as markets should be this. You approach it as markets are telling me this, right? Markets are right. You're not. And you flip there at some point, right? And it's probably along roughly the same point where you reach this level of acceptance of like, hey man, like I don't know better than the markets. And it's probably roughly around that.
It was a desire to stop losing money.
Yeah, it's funny what that'll do.
Powerful.
And would you say when you started, I don't know if this is part of it, but like when you work at some place like Goldman Sachs, like I work from home now as well, and I talk about how it took me 4 or 5 years to finally, and this is when I was working on a floor, like to stop comparing myself to the guy to my left and to my right and how I knew they traded, right? Super aggressive, super tight, quirky, right? And then I have me and I'm like, wait, who's winning? Let me try to do that or whatever, right? And now that I'm here, like, I figured it out a little bit before I left the floor, but like, I was like, all right, like it's too much. That's not me. What am I? I'm a tight, aggressive player, right? I have very, very, very short downside, and I have the skill to run it up on the upside, right? That's who I am. So I just try to find a million of those. And once I did that, so it sounds like a kind of similar to you, where you finally like were able to sit back there by yourself and be like, all right, what comes naturally to me? What feels right to me? Well, let's start with this like process of getting everything on Excel, the time frames. And now I'm not comparing myself to anybody. I don't give a shit how my boss thinks I look with my Sharp ratios and my whatever. Is that roughly correct? That makes sense?
Yeah, that's a really good way of teasing it out, James. It really is. I was on this quest to sort of take all the emotion out of trading. And I used to have a kind of joke in the trading circles with my, the guys that I traded with. And, where we had this with this, just like an inside joke where we used to be like, we trade with no emotion. You know what I mean? It's like, yeah, I'm getting out of this. I'm stopping out. Like, I'm not upset. right? The risk reward is the risk reward that I took, right? I split aces against
Yeah.
the 6. It's what you do. If you don't win every hand, too bad, but you still make the move the same way. So I think it's fair to say that, like, once you identify that, then it took me a long time to get to the point where I'm now. um I feel that, I kind of checked all 4 boxes. Have you ever heard that? I guess it's like a metaphor or a saying, like, when you start a job, you are unconsciously incompetent.
Yeah. Hmm.
It's very that whole thing directly applies to trading, right? When you start, you're unconsciously incompetent. You don't even know what you don't know. And then you become consciously incompetent, where you
Yeah.
understand that you don't know what you're doing yet,
Yeah.
right? And then you become consciously
Conscious.
competent,
Mhm.
where, like, when you focus, you understand what you're doing and you can do it right, to becoming unconsciously competent, where I feel like I actually am now. And I like to say, it's not to toot my own horn at all. It's just because I've been studying myself. And now I notice that I turn the screens on and I watch what's going on and I observe. And it's very natural to me exactly where to place bets and how much to place. And, it's not like I don't sit here sweating over it. I'm just like, oh, here's this trade. I got to, with whether I'm on my phone executing, or I'm like, gotta have to put that on. Okay, got to take some profit here, and it's just kind of trading with no emotion and being like, oh, this is what the market's giving me today. I have to make sure that I'm participating.
Yeah.
So things like
Yeah.
that.
I think that's a great one. And the only way you get to the unconsciously competent in anything seems to be
Yeah,
hours, time in the seat, right? Like you're just
Malcolm
not gonna.
Malcolm McDowell, man. Yeah, ten
Yeah.
thousand hours to become an expert.
It's a long
Uh,
time too, you know.
Yeah,
And
it is.
it's like it's hard to cheat. It's like working out and stuff. Like it's really just hard to cheat this system. You know what I mean? Like it's just really hard to skip steps in trading.
It's the ultimate, because it is the ultimate piece of freedom. It is the ultimate arbiter of truth. There's nowhere to hide,
Yeah.
right? Your P&L is your P&L. And if you care about nothing but the P&L, that's when you'll start to find some success. Because if you care about being right, you
Yeah.
ain't gonna
Good
be at
luck.
the table very long.
Yeah. It's interesting when I hear you say like the emotion thing has always been an interesting one for me because I uh I had a mental coach for a while a couple years ago and it was all about accepting my emotions and using them to best work myself through the stages of grief and like getting on with making the next best decision, right? Because I'm a person that emotion lingers on and it just seeps out of me into everything I'm doing. So, like, when I hear somebody like you say that, to me, it makes me think you have found the best way to operate in which you can best be fine with the emotions and then move on to the next best decision in like the shortest amount of time. Not necessarily that you're trying to be a robot because you're human, right? Like it's hard. You could operate with no emotion and do that stop out thing. But once you lose like 40 in a row, like there's probably a little part of you that's like, well, okay, wait a second. Like
Yeah.
I feel like I'm wrong. I feel like I don't understand. Like, at some point, like you have to change, right? Is that somewhat accurate in
Yeah.
how you think about it?
No, very, very much so. There's still emotions to manage. But what I feel like, what my system has done is take the ups and downs from being extreme to being like a little bit tighter
Mm,
frequency. Whereas, I might have been throwing my desk over and smashing my phone, if I had made a severe mistake years ago, something like that. Now I can take it a little bit easier. I'll know I'll get another opportunity. But the emotion is not as high or as low. Stopping out, it's like, this sucks. I was wrong. You'd be really upset. Let the trade go. It would be worse and worse. So like more volatility on the downside that way, and that never pays off. So
it's
yeah,
like
I
you
guess.
have an emotional VIX. So like you have like a spike in your emotional mix and you just sell it as quickly as possible, whereas it used to linger up high.
Yeah. Well, the good thing that when you say that, I just reminds me of something, James, that might contribute to this conversation is I've gotten good at taking small losses, and that has contributed greatly to my ability to think clearly. And, I have this thing where I have like a Friday litmus test for any new position, right? And that just kind of consider this scenario where I'd put a position on Wednesday and not be really in or out of the money. And then going into the weekend, I would go from Friday afternoon sort of being in the money or around flat to just somebody coming in and smashing it like towards the last half of the day. Right. And like the old me would have been like, what the, what is this knucklehead? What is this crazy move all about? Like, what are these weak sellers doing? I'm going to hold on to mine and then we'll get a Monday, right? And then invariably you come in Monday, the stock is lower, you're still long, and now the decision is 10 times harder about what to do next. Whereas now I sit here on Friday's close between 3:30 and 4:30 like this, looking at the markets and looking at my pad. And if something that I sort of just put on starts cascading away from me or going from, God forbid, positive to negative P&L, I'm like, see ya. See you next week. Right? Down 1%, fine. Down 2%, beautiful. You know what I am? Flat.
Yeah.
You know what I am? Waking up Monday morning with open eyes, looking to trade. Not like, oh God, how is this going to go? Oh my God, it's still down here. And people forget that the hardest part is that you still have the position.
Yeah.
Right? That's the thing that you learn from being at Goldman Sachs and having to report to Lloyd Blankfein at 4:00 in the morning where his stop loss was executed. Right. And it's so like, if as a dealer, if I'm not ahead of this and sort of short in my own book, if I see this avalanche coming, I'm not going to be able to call him and tell him that he got stopped out down 5% away from his position. So I would be short going into it and sort of keep him tight to the market, give him part of my short as my cover and say, here, you got out right tight at the market, all done. And that was only because you kind of could see in the short term what was going. You'd hear that there were other stops at that level and sort of, that's the way you can anticipate. It's just an idea.
Yeah. And another intangible of that specific example is I was just talking to somebody about, we were talking about, should I take this position into the weekend or not? And I was saying it, well, I need to see what it's at like Friday afternoon, because like you said, if you're close to even, slightly down, like the value of sleeping easy over the weekend and being able to prep yourself for Monday morning, rather than if you're in a position and it went down like 6-7% or whatever right at the close, not only if you didn't get out, not only are you offsides there and have a tough decision Monday morning, but you're going to be thinking about it all weekend when you're at your U2 concert in Vegas or whatever. And that's valuable, like mental capacity that's only weighing on you over time. Right?
Oh yeah. You know that meme where the couple are lying in bed facing in the opposite direction,
What he's
right?
probably thinking about. Yeah.
The only thing that ever comes to mind for me on the guy's side is, where's it going to open? You know what I mean? Where she's like, I wonder what he's thinking about. And the only thing I'm ever thinking about is like, where's this stuff going to open? Like, what do you think? And it's like, it's so pathetic that that's all it ever is.
Yeah. Yeah. So I think that's a hugely powerful one. It's one thing if you're way on sides, right? Like then it's like maybe you want to keep that position, just let it breathe, whatever. Maybe it'll gap up, right? Like maybe there's good news to follow it that people knew about or whatever. But man,
Here's
with all the
another
shit
one.
going on too, like who knows what'll happen.
Yeah, but then there's another good lesson right there, James, that I learned and has been one of the best sort of, tactical trades in my tool book in terms of, being less long at the highs and longer at the lows. Like when I'm in a name that's trending for any period of time my way, God forbid there's a gap higher to a new high for whatever reason on news. Like I used to be, like, this is a great transformation lesson. I used to be the guy that was standing up on the desk telling people how smart I was because I was long this thing. And here we are gapping to new highs and not making a sale until I finally taught myself the golden rule of, if you're high-fiving about your position with one hand, make sure you're making sales with the other hand. And so now I reflexively, if I'm in anything that sort of gaps higher in any way, I'm like, oh, sold, I'm out.
Mm.
And sometimes, one out of 4 or 5 times, it's a gap higher and maybe run away a little bit higher. But the other 3 out of 4 times, it goes from, look how good our P&L looks, to take a snapshot of that good P&L and leave it there for a little while,
Yeah.
right? And now don't have the position and use those chips for getting back in to that trade at a better price, right? But I used to be afraid to be flat something I was bullish, because I thought I was so smart that it was always going to go higher. Meanwhile, I learned from like looking at my P&L and like from trading out of things and staying bullish, but being flat. There's nothing wrong with being flat at a new high, something that you've been long. In fact, it sounds like that's what you should do. So it's just really hard to pull those levers when you're in the trade, though.
Yeah.
So,
I think oil is a perfect example of that. Like, if you're bullish oil and we have this gap up because of this Middle Eastern thing, if you've been around the markets long enough, that might have been a great spot to sell, which just 2 days later, look what's happened. It's gone back down. And then there's like derivative effects of that. Like if you hold and you're celebrating and it even went up a little bit more, and like you're like, oh, we're going back to $100 plus oil, and then you lose, that gap fills, maybe you sell, and that's when it starts bouncing back up. Like the derivative effects of like the loss of momentum, the feeling of being dumb and not taking the winner that you were offered, like those just start piling on each other and will affect the next trade, right?
yeah, we had, there's another good discussion in that, because I'm actually timestamped to be, timestamped getting into the oil trade at about $88 or $89. I don't know where it was, but it was something like that. And my target upon getting into the trade, I think it was in July, I got Navigator subscribers in. I had a target of 93 because that was my technical target. It matched up with two highs that were previously at 93 on the chart from, earlier last year, I think it was, or late last year, like October, November, something like that. And basically I got in at 88, 89. It went right to 93. And I was like, this is a great place to take profits. I sold my oil into that run. And then I was pissed off about it because 2 days later it traded 95, and I'm sitting here, I'm like, oh man, did I miss this? Do I buy this back? And like I've always learned now is like, give it some time. Like you may not have picked the right moment, the right exact right price, but if you pick the right level, then it's still a good sale. Right. And so I didn't get all caught up in having to buy it back at 94. But that's another thing that's what the badge is for, that you have to, a skill that you have to develop as a trader, is sometimes you got to buy it back, and sometimes when it goes 95 bid, and you want to get in back on that, on the long side, sometimes you do have to, sometimes you don't, sometimes it does work out, sometimes it doesn't. But that was just another example of, okay, the trade is at my objective. I have to let some out here. So I'm just going to let it out. And, now I got to deal with the fact that it's still trading here. It hasn't gone down. It looks like it may be breaking out, et cetera, et cetera. But we kind of just held tight and now got the opportunity to buy it back lower. So, and I'm not saying that they all go this perfectly, but that one happened to have. So there was a lesson there. Gets to your price target, sell it, man. That's what you're looking for. Take the profit, and then sit and reevaluate. So that's always a valuable thing to do.
Yeah, it's tough. And that's the upside plan is like so underrated. Everybody has a downside plan. That's easy, right? Like pick your fucking wick on a chart. If it goes past that, like you're out, whatever. But the upside plan is like the hardest thing because you just don't want to sell when it reaches your target, right? It's so strong. It's so strong. Like, and sure enough, it was like reinforcing that with the 94, 94.50, 95.
So here's something that is another lesson in here, and this came alongside writing the Morning Navigator, and something that I didn't see coming at all. But when I first started the Morning Navigator, there was no view matrix in it. And so I added the view matrix, which is just like a set of my, views and sort of times and areas that I would get into them and my targets for getting out. But when I had clients, my initial clients pouring into me saying, man, I'd love you to put your views on there and kind of establish what risk reward you're looking at. And they showed me some other kind of, monitors that people were using to monitor their P&L. I was like, okay, I'll do something like this. But forcing yourself to do that alongside writing keeps you really accountable across
Yeah.
the board, and then forcing yourself to act when you get to the targets, right? Say you got to that 93 target, like you have to just understand after you get all the experience of doing this time and time over again, it always feels like a bad sale
Yeah.
when everybody is, scooping it up and you're letting it out, right? It always feels like a scary purchase when you're trying to get back into that trade along the support level, right? Now it's pulled back to your support level and you're going to buy it again, but you're like, Jesus Christ, I feel like I'm about to get freight trained here,
Yeah.
right? It always feels like you're about to get freight trained when it works,
Yeah.
right? And it always feels like a bad sale when it's a good sale in hindsight.
Yeah.
So when you get the experience of managing that view matrix and going through all those experiences, like, oh man, it's at my price target. What do I do? Raise my price, like the anxiety button, raise my price target, take profit, right? 9 times out of 10, take profit, right? And worry about it later. So there was just a valuable lesson for
Oh
me
yeah.
in that. And it kind of it kind of sharpened my sword a little bit in terms of being tactical about trading like that and taking the emotion out.
Yeah.
We're at my number. I don't care that OPEC's got a positive statement out there. The chart
Yeah.
says sell it. I'm going to sell it.
Yeah. Yeah. That's the accountability thing is interesting because like you have this other level that most traders don't have where like you're putting calls out there, you know what I mean, and like you live and die. We all know people live and die by the call, right? Like especially people with huge followings, like and that make not many calls. Like if you miss one, you just get bludgeoned out there, and you are making calls every month with targets and things, but like nobody's going to hate on the dude who bought oil at 88 and sold it at 93. They're going to hate on the guy that bought it back at 95 and then took a big loser because they're not going to hate you for the winner. You nailed it. You know what I
Yeah.
mean? And like,
Yeah.
that's also for somebody like you, like that's valuable to you over time. Like you're not the guy that just keeps changing his mind and like, whatever. You have your
No.
thing and you stick to it.
Yeah, that's become the business, James. My motto or my premise with clients and that's sort of with, how I start with my consulting clients is the way I used to start with my sales trading clients. And is once that, I got the people that I was talking to in a room and I could, get to know them, I always used to start by saying, if I can help you make money, will you pay me? Right. If I can help your desk, be better at execution, get some information, understand what's going on. If that helps your operation, will you pay me commissions? Because I'm happy with that premise. I think that I can help you make money and I want to get paid in return. And it's sort of the same way now with my consulting clients. It's like, I have family offices and portfolio managers that I talk to, some daily, others almost daily. And, the starting premise was the same way. It's like, look, if I can help you manage risk, will you pay me? And, when you can help people manage risk and, kind of put them on the line and say, look, this is the trade, the way it lines up, here's the risk reward, and have it work a couple of times, you win people's confidence over. And that's like the premise working out is that if you help me make money, will you pay me? And then people are usually happy to pay you in return. And so that kind of filters into, how that side of my consulting business works.
Yeah, it's pretty cool. Like, I'm 10 years deep into this, and I'm really scared to think about affecting other people's winnings or losings. Right?
Yeah.
There's a lot of pressure in that. So you definitely have to have a great record on your hands, a confidence, a comfortability with putting all those calls out there and being accountable and all that. It's an interesting side of the business now that didn't really seem like a thing a long time ago.
No, it
Especially
was
at
just
social media. Anyway.
it was there. It was just in a different form. It really
Right.
was. It's so as long
Yeah.
as there have been trading desks, man, guys have been getting paid on their resourcefulness and what they're able to provide their clients.
Yeah.
There's more than one way to skin a cat on Wall Street. And, you put a resourceful guy at an investment bank with a global trading desk and tell them who they're talking to, that guy will figure out how to make a lot of money out of thin air.
Yeah.
you
I
can
like
bet
to
on.
think of those people that the sales side of the things, with like the bond sales, and like they're probably getting percentages on just building these huge, amassing these huge portfolios. It's really interesting to see the different avenues that people have taken in this industry.
Sure
Um,
are.
so, anyways, we're about 50 minutes into this. I'll just try. I have some more stuff, but I'll kind of wrap it up with something that's more like kind of now and here and now. So, are there any trades or assets or anything out there going back to who you are as a trader that are screaming to you these days? We're in this tactical environment. A lot of chart things have been kind of working, so I do feel like that's maybe your realm. But are there any trades or assets out there that have been screaming like, "This is Tony. This is my wheelhouse right now. This is looking great for me, and it's going to be looking good for a while." And then are there any that aren't, that are like, "Oh God, stay the fuck away"?
Yeah, yeah. So I'll talk about the two places that I have been recently making money because let's get down to it. I mean, that's what it's all about. So I think the avenues that scream my name are, there are trades that I hold myself accountable to be in, as in, somebody that's got the experience of sitting on a commodity desk for, years and years and years and learning all of the intricacies and signals. I kind of pride myself on not missing, a $5 or $10 oil move, especially if it's up, because I'm a bull market trader. So that's one thing that still screams to me. Like, I feel like, we're looking at the last sale of $84 right now, and it screams to me that it's still like the risk is not priced symmetrically in the market, given the case that we just emptied our strategic petroleum reserve. And it looks like the Middle Eastern situation got just we can say a lot sloppier than it was 2 weeks ago. And I'm not even going into the politics because I'm not smart enough to understand it at all. But when I see, the US in support of Israel and Saudi Arabia in support of Palestine, kind of the same way that, Mohammed bin Salman gave Joe Biden that stinky fist bump at the curb when he showed up at Riyadh, that combativeness is still there. And it's still there in the wake of the US draining their petroleum reserve. And it's still there in the wake of Saudi Arabia, forcing output cuts and forcing this move tighter and higher in crude oil. And it feels like with, the cauldron of potential headlines coming out of that sector, that just crude is still dramatically mispriced to me. And maybe it's still working off the sell-off that it just experienced because gasoline just got flooded. All of a sudden we had a slowdown in gasoline demand. It corresponded to a buildup in inventories, caught the market long, and we saw the whole crack spread complex fall apart. So the market's still digesting that, but that's one trade that looks asymmetrical bet size to me, right? Not at all times, but the risk reward lines up where I would bet now that the next $20 in crude is higher. So I'll take 102 I'll take 104 before 64 all day long.
Mm.
That's one trade. I think there's a secular bull market in home construction in the United States. Everywhere I see there's construction. Everywhere I travel to, there's construction and underlying tones of new construction. And I don't think people realize how powerful it is that what seems to be going on is that everybody's spending a lot of money fixing up their own domain in for the new world. That's sort of the new economy that's taken place post lockdowns.
Mm-hmm.
So the home building sector just really withstood an unbelievable rate rise, and it's still on its feet. That's something that I can trade from the long side with some confidence. Not always full boat long, not always all in long, still trying to be less long at the highs and longer into support. But those are sectors that I can have confidence in trading. The things that scream stay away to me are gold and gold miners.
Mm-hmm.
And that's just because, I'm kind of sticking to my view of being a collector of gold physical right now, and not saying that I want to bet all my chips on a move through, that resistance level around 2100, which I think is eventually going to cause, some kind of severe explosion on the upside. But that's something to me that seems a little bit too risky to bet on the upside where I want to. And I feel like that's a pretty popular thing. And the other popular thing, excuse me, sorry about that. The other popular thing that is worth mentioning is still the negative view or the sentiment view on the economy. Like, I feel like if you go on FinTwit, it's very easy to figure out that everybody is either there's a recession happening tomorrow, next Tuesday, in 2 months, in 3 months. Believe me, I can pinpoint people, and I will not name names, that were saying this 4 months ago.
Yeah.
And I know I can pinpoint people that were saying in February and March of this year, the US will be in a recession by June of 2023.
Oh, yeah.
It's September. And
Where you at?
we're doing the John Travolta
Guys,
meme.
where are you?
Looking around. Yeah. Hello. No recession. GDP growth. Right. Unemployment's low. Right. The only problem on the board is inflation. And so I think that that's what people should focus on, and what that could do to interest rates, besides this unbelievable bear market in bonds that we're in, and less on the fact that there might be a slowdown of 2 quarters of GDP coming, in which case, as far as the market's concerned, who cares? So that's just a couple of my stronger views, if you care to hear them, James.
Yeah. And what's cool to touch on your oil stuff is that, like, even in today's note, you were saying how you're very open to moving down first too. Like, you're kind of known for being like, people kind of paint you into a corner as being like a big oil bull, right? Like, that's kind of generally, but you're very open to the point of like, hey, we could easily see like another $5-10 pullback before I have that scary moment again where everybody's like, no, oil's going back to 60, the Middle East stuff's being forgotten about, the petroleum reserves going back up, and then maybe that's the spot where nobody's going to want to be talking about it. So
Totally.
props to you for that. Any view on like your bonds, just because you mentioned it and they are kind of interesting right now?
I'm a go with the flow guy. And since I do still anticipate more inflation, higher interest rates, more commodity inflation rather than not, and all of this stems back to us doubling our balance sheet in 2019 or 2020. I forget now which year that was. Get a little bit mixed up.
Feels like a decade ago at this point.
I know it does. It feels like 1,000 years ago. That's so funny.
Crazy.
But with the expectation that we're going to see continued, put it this way, we have politically structural energy inflation, right? The whole move to net zero 2030, 2050, I don't care. It's not realistically going to happen, but the political implications are that there is embedded energy inflation in our system now, right? We're shutting down drilling, where, the whole executive order thing, the whole cancellation of the pipeline, right? The fossil fuels are attempted to be phased out. So that's a dangerous move that's bubbling up underneath. And I think that structural energy inflation, where there's now some risk in natural gas in Europe because they're not going to get supply from Russia, that is all going to spill into the ag sector, right? Directly into the fertilizer sector. There's going to be opportunities there. There's going to be opportunities in coal. But those are the things that I think are really important undertones to follow. And I think if I can expect higher yields and interest rates to battle, commodity inflation and food inflation and persistent headline inflation, then I can still think that bonds can go lower. And I'm not a seller at last sale. I'm just saying my view has been for higher yields, and it's not changing, even though we've had the 3rd consecutive bear market in bonds.
Yeah, no, it's really interesting. I think one thing you did there that was cool is you extrapolated to other assets that you maybe feel more comfortable trading, right? So like if you're not really trading bonds, you worked your way all the way to fertilizer, right? So I always like hearing, like, getting a little bit of a tactician's like macro view, because you eventually found to where you feel comfortable with, like, and the market pretty well.
There's a good lesson that applies to this conversation, and I'll let you cut it off right there. But I used to trade treasury, bond ETFs and currency ETFs. And that is another thing that went out the window when I decided I was much more interested in making money, right? And so now what I do is I just observe the currency markets and the bond markets, and I let them tell me how much I can bet on my natural resources based equity investments. And sometimes they're very clear with me. Sometimes they tell me don't bet a lot, and sometimes they tell me send it in, dude. Right? Like when the dollar looks like it's about to fall over and yields look like they're about to go higher, because that was the big trend last year when commodities were rallying. You know, 2-year yields just constantly ticking higher every day. That meant green light go to buy commodities. And so sometimes you get some tailwinds like that allow you to bet big. And really those are really some of the best opportunities that you have in the markets. You know, those times when you get to split aces and you had some tailwinds, et cetera, et cetera. So that's something that I thought
Wow.
directly
Way to
applied.
bring it full circle there to blackjack. That was impressive. I mean, God, this
Cut
guy's
it.
got it all, folks.
Cut it. Cut it at right there, James, at our highest point. Leave the party when you're having fun, man.
All right, Tony, tell people where they can find you, where they can subscribe to you.
Yeah, man. At TG Macro on Twitter. My website is www.tgmacro.com. I don't offer trials, but there are samples of my work on there and recent samples of my work. Anybody of your audience can email me directly, Tony@tgmacro.com. If you have any questions about my product or how it should be used, I'm happy to answer them in an email or on the phone. And those are really my three mediums where I'm spending the most of my time, James. And I can't thank you enough for giving me a platform to talk about this stuff.
Cool. Yeah, I read his newsletter, guys, and it's cool because it's short, it's concise, it's got a little flair to it, and you know, like we talked about, there's actual calls and targets and everything. And it's cool if you're trying to learn. So, all right, Tony, enjoy the rest of Long Island. Enjoy it.
Yeah,
Strong
man.
Island
Atlantic
over there.
Beach, Strong Island, man. I'm gonna go walk my dog in the sunshine and make it back for the close.
Cool. All right. Good luck.
Thank you, brother. You too. Thanks for having me.